Palladium is in a tight triangle consolidation that could break out at any old time. Hang around and I'll show it to you. Hi, this is Tim from TradingStrategyGuides.com. Today's trade pick is a triangle price consolidation on the precious metal Palladium. We'll have a look at that shortly, but first we've got a few active trades to look at. Hey, it's Monday once again. Let's start off the week with a bang. And remember to click the subscribe button and hit the bell so you don't miss any of these great trade setups. Let's take a look at the active trades. Good old Tesla, what can I say? It finally broke that 1400 level, pushed its way up here to about 1550. Wow, that's a wacky looking circle if I've ever seen one. As of Sunday night, I'm moving the stop up to 1114.40, locking in 216.30, which is almost 5.5 times our original target amount. This is really looking good. The E-mini Russell 2000 triggered this sell right here on Thursday, and Friday it pushed up to the bear flag, but didn't close back inside the bear flag. So that's good. I'm still on this ride. Stop loss is 1471.80. First target 1342.80. And I'll shut this down if we get a close back inside the bear flag here. Monday's silver setup triggered this buy on Wednesday, and now it's kind of been sideways-ish here, even though it went 3/4 of our target. Hopefully this will regain its momentum breakout and pop up to our first target of 1915.61. And that's it for the active trades. Let's take a look at today's pick. Today we're looking at a triangle consolidation on Palladium that dates back to late May. This is a daily chart of the precious metal Palladium, or XPD USD, showing a triangle consolidation. A triangle consists of an ever-tightening wind-up of the price into a triangle pattern like this. I expect a triangle consolidation to break in either direction, so I'm willing to take a buy or sell signal from this pattern. And the pattern is confirmed by a decline in volume and volatility down here. I measure the volatility using the average true range, or ATR, which shows the average length of the last 14 candles. And here's the trade plan. We're going to buy a daily candle close above the triangle, or we're going to sell a daily candle close below the triangle. On the breaking candle, we want to see this volume bar reach up to this volume average right here. If it doesn't quite reach the average, but does reach 75% of the average, I'll open a half-size position to reduce risk. You can calculate the percentage by taking this volume number, dividing it by this volume average, and you should get at least 0.75. If you don't get at least 0.75, I suggest you stand aside on the trade. The stop loss is 1.5 times the ATR, and the first target is 1 times the ATR. So let's say this thing breaks to the upside right here. On that day, just ahead of that close, you'll take a buy right there, and you'll look down here at the ATR. You'll multiply that number by 1.5, and you'll measure that distance behind the entry, and that'll be your stop loss. 1 ATR above the entry, and that'll be your first target. Of course, it'll be just the opposite if it breaks to the downside. If after entering the trade we get a close back inside the triangle, we will take our loss right then and not wait for it to hit the stop loss. Our intention is that a breakout of the pattern should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We'll then follow stops as price moves in our direction until the market takes us out. Typically I do this using 2 positions. The first position has a stop loss and a take profit. That position will close automatically when the first target is hit. The second position will only have a stop loss, and that's the position that will be allowed to run. When the first target is hit, we will have to manually move our stop loss up to break even on the second position. I will only risk about 2% of my account on each trade. And that's today's setup on Palladium. Remember, my intent here is to tell you how I manage these trades. If you've already got a good trade management plan, use it. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And speaking of understanding your own mind, that's my intent for the trading maxims. The maxims help me control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you do the right thing. Feel free to borrow from my list. And today we're going to go back a little ways for our maxim of the day. Tim's trading maxim number 55. The magic you're looking for is in the work you're avoiding. This one hit me hard when I heard it. Are you having trouble progressing in some area of your life? Are you waiting for a magic bullet to fix your problem? Well, sorry, that's just not a thing. There is no magic bullet. Well, wait, maybe there is. What is it that you know you should be doing, but you're not doing? That's your magic bullet. Maybe it's someone you need to forgive for something. By the way, you know forgiveness is for you, not the person that wronged you, right? But I digress. Maybe it's that job for which you should have applied. Maybe it's that business you've been meaning to get started. You know, whatever it is, you don't have to jump in with both feet. Just dip your toe in. Commit to taking, say, 15 minutes a day to do whatever it is. But be sure that when you make that commitment that you spend that 15 minutes every day doing it. And do it early in the day if possible. Then it's out of the way. You can spend the rest of the day being happy that you did what you didn't want to do. In a few weeks, you'll wonder why you waited so long to get started, because it was so easy. And just so you know, as I point at you guys in this area, I have 3 fingers pointing back at myself. Remember our Palladium trade plan for today. We're going to buy a daily candle close above the triangle or sell a daily candle close below the triangle. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the daily ATR, and your first target is 1 times the daily ATR. And remember to click the link below to the trade management video for more details. Also, sign up for my free Trading Picks email list so you don't miss any of these great picks. I send out about 2 or 3 trading picks a week from all different markets, and you'll get to see them first. Best thing is, they're free. I'll put a link below the video. And be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. Don't hesitate to ask any questions you may have. I'll either answer your question in the comments or in a training video, or both. And remember, the only stupid question is the unasked one. Don't miss the next installment of the Trading Education series on Wednesday, when I'll talk about the TradingView trading platform. As always, thanks for watching. Thanks for subscribing. Don't forget to hit the thumbs up below. Have a great week. I'll see you Wednesday.